Good morning. We will pay attention to the ledger accounts and to the current accounts of the partners today. If we look at the current account of Fund Smith, he had a credit balance at the beginning of the year. So that means the end of the previous year, he didn't take all the money he was entitled to, and the business actually owes him money. The current account of Tony Land has a debit balance, indicating that he took more money the previous year than he's entitled to, so he owes money to the partnership. In the current accounts, when we have to pay money to the partners for salaries, bonus, interest on capital, the current account will be credited to increase the equity, because current accounts is part of your equity, and equity increases on the credit side and decreases on the debit side. And for all the expenses that must be paid to the partners, we will debit the accounts to indicate that the expenses increase. So first of all, we will complete the adjustments. Adjustments means that we want to show what is our total expense. So I will debit my interest on capital. Normally, when in a business you owe money for rent or for salaries or whatever, you will credit the accrued expense. If this money is payable to a partner, you transfer it to the current account. So my first entry would be to debit the expense and to credit the current accounts. With the salaries, we will do the same. We will create a salary and credit the current account to indicate that this amount is outstanding. And for the bonus, we will do the same. We will debit the bonus account and we will credit the current account to indicate that that money must be paid to the partner. So those are my three adjustments. After I completed that, I will do closing transfers. At the end of the financial year, all nominal accounts are closed off. Sales and cost of sales is closed off to the trading account. All the normal income and expenses is closed off to the profit and loss account. And these expenses that must be paid to the partners will be transferred to the appropriation account on the debit side to indicate that part of this profit that we calculated in the profit and loss account will be used to pay the interest, salaries and bonus. So that is a closing transfer. Then we will take the outstanding amount. So we'll take the credit side, subtract the three amounts on the debit side to determine how much profit is left over that can be divided between the two partners. And this profit will then be divided in their profit sharing ratio. So we will close the appropriation account by balancing and transfer these amounts to the current accounts on the credit side. So the current accounts will be credited with this additional profit that must be given to them. We will close the drawings account to the current account so that we can determine on the credit side what is the amount that is payable to the partners. On the debit side, we show how much they've already taken, and then we can work out the balancing figure to determine what is the amount that's still outstanding to the partners at the end of the year.